Okay, so let's begin. The 5 seconds binary options trading strategy. We've been testing this disaster of a strategy up till now for around for 6 days. This is the seventh day. Um we have mixed results so far. So we still have today, tomorrow, and after tomorrow. So we will get in 9 days a statistical sample to upon which we will give a final verdict if this strategy is good to go or not. Every single day, I'm trying to improve on it, add a few technical analysis here and there to give us some sort of an edge or a higher probability of winning more trades than losing. That being said, the strategy is very dangerous, especially if you have a small account of 100, 200, $300. It's dangerous. No sugarcoating. I'm not here to tell you things that you want to hear. I'm here to tell you things you need to hear and know. So by the end of the ninth day, if we have positive results, the majority of the days are in profit, I'll give it a green light. Okay. So risk disclaimer, that's dangerous. That's a very machine-like trading style, um, and it involves as well compounding. So whenever you lose, you have to add to your next trade amount. Let's go ahead to the Excel sheet very quickly. I will explain the spreadsheet that you should have on your side while trading the strategy. We'll go back to the charts, set the charts up, and begin trading live, testing this strategy. So the Excel sheet is very straightforward. The martingale cycle has 4 trades. The fifth trade is completely optional, up to you. So your first trade amount is 1. If you lose, you go to 2.3. If you lose, you go to 5.5. If you lose the third, your fourth trade amount is 13. Whenever you win, you will actually be in profit. That's your net profit amount. And you will recover your previous losses. And whenever you win, you go back to the first trade amount. Okay. Now, I have a surprise for you guys. I am creating a very interactive, very smart spreadsheet in a way that also will include compounding. So let's say you win the first trade over here $1. The next trade should be, for example, is 1.05 or 1.10. Why am I doing this? Because we need to reach our daily profit goal as fast as usual and get out of the market. The longer you are exposed to the market, the higher your chances of losing money. So compounding plus martingale will make some sort of a balance to reach your goal faster and stop trading and go do something else and come back later on fresh to trade again. Okay, so this sheet is coming. I will include, you will be able to update your balance every time you win or lose. You update your balance. The sheet will give you your new trade amount. Whenever you have a winning trade, it will increase the next trade a little bit, like in this case. Whenever you have a losing trade, it will calculate the best next trade amount for you to recover your previous loss and be in profit. So this is something I'm working on currently. All right. So we explained the martingale system. Very important point. Recommended balance for this strategy is a minimum of $500. Why? Because you might lose in this case. This is around $24 in loss. If you chose to take the fifth trade and it's a loss, you will reach around $50 in loss. If you have $100 or a $200 account, that's too much. That's what we call over leveraging your account. However, if you lose $50 on a $500 account, that's only 10%, which can be easily recoverable in your next sessions to come without being under pressure. So your mindset, you will not be coming back in a revenge training mindset, which, trust me, if you have a revenge training mindset, you will liquidate yourself in a blink of an eye without even feeling it. Okay? This is why people get sucked in and get addicted to gambling. It's the revenge mindset. It's the idea that you can beat the system. You can't beat the system. These things, that chart is out of your control. You can't beat those charts. You can't beat Steven Seagal. You can't beat Bruce Lee if you have a blue belt of Taekwondo or Kung Fu or whatever. You can't beat him. So the market makers are the Bruce Lee, the Steven Seagal, and the Chuck Norris and the Jackie Chan of the trading market. You, as a retail trader, you are the blue belt and yellow belt and white belt, the player in the market. They will kick your ass big time. Get over it. Get this through your minds. They will kick your ass big time if you don't have discipline, if you don't have patience, if you don't have specific goals, stop loss, take profit, even trading time. You should set a timer. I have 30 minutes to trade, no more. If you don't have all these rules in place and your mindset is not sharp, Bruce Lee over here, will kick your ass big time in a fraction of a second. Let that sink in. Okay? Now, my speech is over. I'm sorry I have to say that because I see many people lose money. Guys, this is your hard earned money you are putting in the market. You work your ass off for 9 hours, 8 hours a day to have a few to save a little bit of money, and you enter the market and give your that money away. The market will not say no, you have a family, I will not take your money. They will take your money without, you know without any source, any sense of remorse or regret. You will be eaten alive. Very graphic today. Okay, let me start by setting up the charts and explaining the strategy. First, you need 30 seconds chart candlesticks. So you go to candles over here, you select 30 seconds. I will disable the auto scroll feature, enable the timer always. I will disable auto scroll for today because I need to do some technical analysis while trading. Also, you need to add from the indicators tab over here a moving average. So you add the 200 moving average. I like to change the colors to pink because in case we have ladies watching, which is very rare. I don't know why ladies don't trade. The ladies are much better than us. I know this from my wife. 2 pixels. I like to make it thick and click save. And then you need to adjust your expiry time over here. By default, it's 5 seconds. So you can change the expiry over here. So you choose S5. Adjust the first trade amount to $1. The next thing you should do is add as many pairs with more than 90% payout. Okay, you need for the strategy to work, since it involves martingale, you should find at least pairs with 90 plus payouts. Anything below your martingale will not work anymore. It will result in losses. So let's add as many high payout pairs as possible. Okay, all right. So now we have many pairs. Now the strategy. Let's explain the strategy. Now we know for a fact it's a 5 second expiry. Okay, the strategy as it is promoted all over the place has only one indication to enter the trade, which is you look for a new candle open. If the first 5 seconds are red, you go for a 5 second sell position, and if the first 5 seconds are green, you go for a buy for the first 5 seconds. So this is your entry point. We're gonna stick to that. However, we will add a few layers of technical analysis and confluence to increase our winning probability. So in this case, your first indicator is the moving average, the 200 simple moving average that you see in pink over here. So when you see the price moving, so you only take sell trades. Also, if you have the price, look at this. If you have the price moving above the 200 moving average, so you have an uptrend. So you only take buy trades in this position. So whenever you have a 5 seconds green at the first open of the candle, you enter 5 seconds trade to the upside. Why we are doing this? Because we are limiting ourselves to trades that have the momentum of the market makers. How do you know what is the momentum of the market makers? The 200 moving average will show you where are the market makers, the Bruce Lees, the Steven Seagals, the the Jackie Chans of the market, the big guns. Where what are they doing? In this case, they are going for a buy. So you jump with those guys. You make use of the momentum of those guys. You don't work against them. Never work against those guys. Okay. Along the way, what? So these are things. If you add to your strategy, to this 5 seconds strategy, it will increase your winning probability and reduce your risk. Now, along the way, while I'm trading, I'll add a few more things to look for. So keep watching. Okay. So actually, this is a nice, very powerful trend to the downside. Bruce Lee is with us. So I'll be looking for sell trades. And we have, let's see here, you have here a higher high, and then the pair couldn't do a higher high. So this is your trend line. Okay. So here would be the ideal situation to go for sells if you have reds. However, I'll start taking trades because I know for a fact you guys, if you will trade this thing, you will not wait. I know you don't have the patience. So I need to show you what's going to happen without a little bit of patience. So let's wait. If I get red, I'll go for a sell. If I get green, I'll do nothing. All right. Remember, guys, if you have any questions, you can use the live chat. If you are watching us on YouTube replay, smash that thumbs up, subscribe. We do testing of all sorts of strategies. Okay, I have red, go for a sell. That's a very close loss. Look at this. If we had a 10-second expiry here, that would have been a win. You know, I've been watching the trades for the past 7 days. A 10-second expiry would have mitigated a lot of losses. However, I stick to 5 seconds. We have green, so we don't do anything. This would have been a clear win if we had a 10-second expiry over here. So I'll test this thing, maybe not next week, the week after, with a 10 seconds expiry. I'll keep on counting I'll keep on watching today for, let me change the trade amount to 2.3 since we lost the first trade. Let me see. Strong red, green. Okay, we do nothing. Remember, the market makers are with you for sells, not for buys. And look at this steep incline of the 200. So this is an additional indication that the downwards momentum is strong. So you don't take buys, you take sells, boys and girls. Okay, let's see. We have a sell over here. Beautiful. Come on. That's the win. We go back to $1. Okay, let's see. You're already in a small profit. Beautiful. Nice opening red. Powerful red. 26. We go for a sell. That's a loss. All right. 10 seconds would have been a loss as well. No problem. We add to 2.3. Increase the amount. In fact, maybe, no, it was a loss for 10 seconds expiry as well. Let me see the next candle open. Green. Green. 25. Green. We don't do anything. Let's see. Guys, also do me a favor. We need to reach 500 subscribers. Um, Help me, with the algorithm. Let's see. We have red, red. We go for the sell. Help me with the algorithm. Share this thing if you have friends who are traders. Share it with your friends. That's a loss. Share it with your friends. Subscribe. Click that like button. You have those emojis in the chat. If you can send hearts and confettis and things, it will help the algorithm make us reach more viewers. We are coming close to this trend line. Let me see. Powerful red. We go for a sell. Oop, I should have increased the amount. No problem. This should have been 5.5, but no problem. I will not increase. Let's go back to 1. And a 10 seconds would have been also a win in this case. When you do a mistake, don't double up. It's enough. You are already not in loss. So go back to $1. Let's see here we have green, so we don't do anything. Okay, let's wait for the next candle open. Let's see, we have red, green, red. Go for sell. That's a lot. A 10 seconds would have been a win. A 10-second trade would have been a win. So increase the amount to 2.3. So this is the second time a 10 seconds would have avoided us a loss. Let's see. Green, red. We'll go for a sell. Pull back. See? Beautiful. And 10 seconds would have been a very easy win. Go back to 1. Keep watching the payouts. The brokers always change the payout. Okay, we have red. Okay, stable red. Come on. Nope. Turned out to green. We don't do anything. Okay. Few seconds. And here we go. Green, red. Okay, we go for sell. Okay, let's see. All right, so that's a loss 2.3. We increase the amount. That was very close. However, the sellers are stepping in. This zone over here was breached as well. So we have the sellers with us. Give me red, green, green. We don't do anything. We wait. I think we'll see a strong red the next bar. Oop, let's see. Nope, it's a green. Oops, pull back. Okay, this is nice. Topping tail bar, it means you have sellers pressure entering the market. Beautiful, that's it. As expected, this is a red. Give me red. Nope. 25. Okay, we don't do anything. Here we go. See, be patient. Why the rush? We don't have. Why are you rushing yourself into the market? I mean, you give your boss. Let me see. We have strong red. We go for a sell. That's the one. We come back to $1 trade. I was telling you, you give your bosses 8 and 9 hours per day sitting there to make, let's say, $50 or $100 per day, for example, and yet you come to the market and you don't give yourself an hour to make $20. 1 hour, not 8 hours. I can't understand this mindset. I'm in a in an aggressive mood today because I see people losing every single day. Okay, so let's wait for the next candle open. Let's see. Give me red. Nope. Yes, it's a red. I'll go for a sell. Beautiful drop. We have a win. So we stick to $1. Now, the Excel sheet I'm preparing for you guys and for me as well. When you have a win on $1, your next rate is 1.05 or 1.10 cents. This way we can, speed up a little bit our goal reaching process. We have green, we have red, green, we don't do anything. And for example, if this 1.10 loses, the Excel sheet, you go to your Excel sheet, you mark it as a loss. It will give you your next trade amount to recover the loss and be in profit. Once you have a win, you go back to one. And as long as you are winning, the trade amount will be increased slightly every single time. Green, we don't do anything. I'm still thinking if I'm gonna provide this Excel sheet for free or I will charge something, affordable for it. I'm putting a lot of work to build this up. It's gonna be very interactive, very, you know, it will systemize your trading. You will set your goals, you will set your balances. Okay, we have red, red, go for sell. Okay, you see, 10 seconds would have been a win. Most probably, not sure. Okay, so let's increase to 2.3 trade amount. See, it's coming back to this trend line. Give me red, green, red. Okay, we go for sell. Okay, so 10 seconds in this case, let me see. 10 seconds would have been a win. Let's increase the amount to 5.5. Ooh, look at this gap down. Please don't give me red. It gave me red. I'll have to go with the strategy. This is against my... I will never take a sell in this case. However, this was our entry point over here. 10 seconds would have been maybe a 50-50 chance a win. So we'll increase our trade amount to 13. Okay, let's see. We have red. I'll go for sell. 10 seconds. 10 seconds would have been a win on this one. Fuck, man. So we already, if we had a 10 seconds expiry time, we already mitigated 4 losses. So removing 4 losses out of the... Let's see, we have red here. Let me go 30. I'm late. I won't take it. I'm late. So my fifth trading amount is 30. This would have been a win. I was talking to you guys, so no problem. So 10 seconds already removed 4 losses for us, which is great. Why? Because those 4 losses removed are actually winning trades, are actually 4 situations where you shouldn't have doubled up the amount. These are 4 situations where you wouldn't use the martingale. So now it's becoming risky for $100 account. 30 is very risky. We're already $19 down. You should stop at this point. Let's see. We have red. Red, we go for sell. And it's a loss. It's a loss. It's a loss. Okay, I'll continue trading. At this point, you should stop. Stop trading. Okay. At this point, if you have, even if you have a $500 balance, you already reached 10% drawdown, $50 loss. So you should stop trading. Let me go ahead before continuing trading. I'll go ahead and mark this day as a loss. Okay. Let me save this thing. So let's do this. Now, in this case, what you should do, you should take a break. 4 hours, maybe come the next day. I will change the pair and I will go back into the initial amounts. My goal is to recover. My goal now is to recover $20. Okay. So let's see if I can do that. So let's find another pair. Look at this, very powerful sellers, strong downwards momentum. So we'll also go for sells. Do you want me to remove the rules that I've put in place? Do you want me to go with green if it's green or red if it's red? So we stress test the strategy even further. Do you want me to do that? And remove the 200 moving average over here? It's up to you. I'll make it up to you in this case. Let me see if I have red over here. I go for sell. Nope. I have green, so we don't trade. Let's see the next open bar. Okay, we have green, so we don't do anything. Let's see. Relaxer says trade based on color only. Okay, trade based on color only. Okay, let me see. So we have a sell over here. I'll take a sell. That's a loss. Let me see 10 seconds. 10 seconds, it's a win. Also, in this case, at 10 seconds would have been a winning trade. 2.3, and I'll wait for colors only. No technical analysis. Let me remove the moving average. Okay, we have green. Green, I'll go for a buy. That's a lot. Let me see at the 15-second mark. Okay, at 10 seconds it would have also been a loss. So increase to 5.5. Wait for the next candle open. Let me see. Red. I prefer red, of course. Red. Go for sell. Ali says, I think that is acting as a trend to take the trades. Can you clarify, Sarwar? We have a win here, so we go back to 1. Do you mean that you should follow the trend? Is this what you mean? Okay, I have green. Green, I go for a buy. It's a refund, although a 10 seconds would have been a win. A 10-second trade would have been a win. That's a refund, so you stick to your amount. Okay, you have red, green, green. Go for a buy. You have a win. So let's stick to $1 and wait for the next bar. I mean, it's like a trend to follow. Exactly. You should follow the trend always. Whatever the strategy you are using, you should follow the trend. So let's see the next bar. So I need to reach $70 here to stop. We have red, green, red. I'll go for a sell. That's a win. Beautiful. A 10 seconds trade would have also been a win. Fantastic. So we stick to $1. Let me activate the auto scroll since I'm no longer doing any form of technical analysis. Green, go for a buy. That's a win. Let's see. Okay, we have red, green, 27, 25, green, we go for a buy. Okay, let me see if it's a 10-second trade. A 10-second trade would have been 50-50. It wasn't clear. So let's increase the trade amount to 2.3 and wait for the next bar. green, green, red, we go for sell. That's a win. Let me see the 10 seconds. 10 seconds would have been a win or a tie. I'll go back to $1. Okay, red, strong red, go for a sell. It's a win. Let's wait for the next bar open. Strong red. I'm completely with reds in this case. We go for a sell. Beautiful. Also, okay, so we stick to the same amount and wait for the next bar open. This is going to be the last trade on this pair. I will change the pair. Don't linger too much on a single asset. Let's see, we have green, 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 we go for a buy. Let's see. Okay, a 10 seconds trade would have been also a win. So let's change. Let me just take a look. This is shaky. I wouldn't trade this on a normal day. However, I'll trade it. Okay, we have green, powerful green. We go for a buy. It's a loss. 2.3. Let's see the next bar. This is strongly dropping. Let's see. We have green, green, green. We go for a buy. Put back on us. So we'll increase the trade amount to 5.5. Let's see the next bar. Oof, look at this gap. Give me green. Give me green. Okay, I'll go for a buy. Beautiful. All right, so we go back to $1. See, this is a huge gap. Fantastic for a buy. So we have a win here. So let's wait. Gap up. Give me red. Give me red. That's it. Go for a sell. Come on. That's it. Beautiful. And a 10 seconds trade would have been a guaranteed win. So we stick to $1. Oops, $1. Let's see the next bar open, and I will go for whatever the color, the first 5-second color is. Green, please give me red. That's a gap up. I need a red. And that's a red. I'll go for a sell. Come on. That's a refund. A 10-second trade would have been a decent win. So a refund, you stick to your trade amount. No problem. Come on. Let's see the next bar. Gap up as well. Give me red. Give me red. That's it. We go for a sell. It didn't give me the red actually, but I saw this pullback. No problem. So we increase. Hold on. 10 seconds would have been also a loss. So let's go for 2.3. See, it's rejecting due to this gap up after a doji. This is gonna drop. Okay, beautiful. Give me red. Nice. Let's go. Go for a sell. Let's see. Okay, it would have been a loss in any case. So increase to 5.5. Two, 1. Okay, we have red. 27, 26, 25. We go for a sell. There's a momentum in this bar. Come on. Let me see. 10 seconds would have been a win. 10 F in. F in. 10 seconds would have been a win. So I'll increase to 13. We have a double bottoming tail bars. I need a green here. That's it. Okay, I'll go for a buy. Beautiful. Come on, let me see. 10-second trade would have been a win. Beautiful. All right. So we are recovering. We already recovered $15.5. Okay, my goal is 70 over here. So let's go back to $1. Give me green. Beautiful. That's it. I'll go for a buy. Come on, look at this pullback. And that's a loss. We go to 2.3, trade them out. Look at this. Look at this. It reversed the last second of it would have been this would have been a win, most probably, on a 10-second expiry. No problem. We are testing. Give me green. The buyers are strong. Give me green. Okay, it gave me red, so I'll go for a sell. Whoops, beautiful. You go back to $1 here. Let's see. Buyers are rejecting. Let's see the close. Okay, the buyers are strong. Give me green. That's it. Beautiful. Come on. We go for a buy. Okay, a 10-second trade. Come on. Okay, even a 10-second would have been a loss. No problem. 2.3. Let's wait. Now, in a normal situation, this is a very jumpy pair. So, regardless, let's trade. Green. Powerful green. We go for a buy. That's a win. And a 10-second trade would have also been a loss in this case or a refund, depending on my entry point. Let's go back to 1. Powerful. Two topping tail bars. I need red. Give me red. I'll go for sell. A bit early. But even if I waited for the 5 seconds, this would have been a win. So we stick to $1. Oh, look at this push. Topping tail bars, 2 back-to-back. Follow-through rate is extremely high to the downside. Look at this as well. Follow through to the upside. Give me red. Powerful red. I'll go for a sell. Come on. Let me see. Okay. So increase the amount to 2.3. Okay. Gap down. Give me green. Give me green. For God's sakes. Nope. I'll go for a sell. Okay. It's a refund. However, a 10-second trade would have been a win over here. Let's go back to 1. It has to reject. It has to reject. There's a gap down. Most probably it will. That's it. You see? It's rejecting. Look at this gap down. Give me green. Give me green. That's it. I'll go for a buy. Beautiful. Amazing. A gap down after a red. This thing has to shoot to the upside. Why, guys, gaps are important? Because gaps in the market, look at this huge gap, have to be filled. The market has to fill those gaps. Okay. Gap up. Give me red. That's it. That's it. That's it. I'll go for a sell. Look at this huge gap up. Beautiful. That's a win. Okay, we have 50 cents left to reach our $20 recovery goal. Come on, baby. Give me red. Give me red on the next one. Look at this. Gap up and red. I'll take it. Give me red. No, it's a green. I go for a buy. Look at this. Look at this. I wanted red on this one. It's a win. Okay. How did I take a sell? I take a buy. I took a buy. Okay, no problem. So, guys, that's it. We recovered out of our $50 loss. We recovered 20. So in this case, you should stop. In case of a $500 account, at this case, you are only $30 down. Okay? So you are not under pressure. So that's good. However, the day is marked as a loss. Remember, guys, we are stress testing the strategy a lot. So I used this trade amount. Let me change the color here. So at the beginning, while I was using technical analysis, we reached this point. I took this trade on a $100 account. In a normal situation, you should stop at the fourth. If you have $100 or $200 account, you shouldn't take the fifth. You should go back to trade the $1 account amount. However, this is how I'm doing things for our testing, our 9 days of testing. So this was a losing day, no questions asked. It's a losing day. So we still have tomorrow and after tomorrow. So up to this point, we have 2 winning days, 2 ties, and 3 losing days. We still have 2. So if these days are winning, so we'll be having 4 winning days, 3 losing days, and 2 ties. And this day mostly was my responsibility. This day over here, I made a mistake. However, I'll keep this thing in the table. Why? Because human error happens. You might make a miscalculation. You might put over here a wrong trade amount. You might forget a zero. For example, if you are putting 2.3 and by mistake you enter 23, which is a possibility. You are humans. In this case, you will mess up your math. So I will not remove this tie and make it a win just because I made a mistake. Human error is part of the game. So you should include it in your statistics. Consider the risk of $50. Sarwar is saying, considering the risk of $50, the target should be around $100 to be in profit every day. No, because $100 you will have to spend a lot of time exposed to the market to reach $100 profit. You are thinking as a forex trader. You can't do that in binary options. As a forex trader, yes, if I'm risking $50, at least I should shoot for a 1 to 2 risk reward. But in binary options, you can't do that because why? Your maximum payout is 92%. So already every time you are winning, you are not making 92%. So it will take you way more time to reach that 1 to 2 risk reward using that sort of a trading strategy. No, no, man. It will expose you to the market a lot. You will see yourself up 50, and at some point the market will go against you. You will lose 20, and you will keep on trading until you reach that $100. That's extremely dangerous. It might work for a day, 2, 3, 4, 5 days. The week after, it will eat you alive. It will liquidate you in a blink of an eye. Okay, you are getting greedy. You are getting greedy. No, you should compound small profits. You can do something. For example, if your starting amount is 500, let me go here. Let's say your starting amount is $500, okay? And you made 550. You traded two sessions, $25 goal each, and you made 550. So you stop trading for the day. Next day, you can start by trading with 1.10 cents instead of 1, right? You can do something like that to speed up your process. That's only an example. But setting $100 goal per day for an account, for accounts anything from 100 to $400, is way too much for binary options. Okay. So that being said, if you have any more questions, I'll give you a couple of minutes. This isn't doing well so far, to be honest. However, I am fixating, heavily fixating on increasing the expiry time. I agree, but when we are winning 50% of days, still will be in a loss, then in that case, um, every day profits of 20 USD but loss of 50 will make it difficult to recover. No, Sarwar, remember what I told you. Your goal, your losing target for a 500, you should stop trading at 20 or $25 for a $500 account. Okay? So when you reach your stop loss, is it 20 or 25? You should stop trading. Okay? Now $50 stop loss for a $500 account is somewhat okay. You are still 10%. I personally would use a 5% risk per day. So I would risk $25 and my goal is to make $25. So it's a one-to-one risk reward. So the next day when you come, you will have 525 in your account. Okay, stick to $25 stop loss. So if you lost those 25, you are still in a tie. And if you made 550, you already made yourself 10% in 2 days. 10% return on investment in 2 days. Don't be greedy, guys. The bank, if you give the bank $500, they will give you 0.3% per year. So divide this thing by 365 days. So if you think that if you make $25 per day is not enough, I'm telling you it's more than enough for your $500 account. It's more than enough. It's amazing. I'm kind of aggressive today. I'm in a good mood. When I'm in a good mood, I become aggressive. Okay. Any more questions? So a $50 stop loss for $100 or $200 or $300 account is way too much. Is way too much. You are over leveraging your account. If you want a $50 stop loss, have yourself a $500 account. That's okay. You are on the higher end of the of a safe stop loss amount. On the higher end. Okay, so as I see no questions, thank you so much. Thank you, Sarwar. You are here every single day. I promise you, once I built that Excel sheet, it's a sort of a trade and risk management Excel sheet. It will simplify your processes. It will give you lots of planning. It will plan your thing. Yes, it should be one to one, ideally, because the OTC don't give you 100% win rate. It's a 92%. Actually, this 92% thing is the edge. This is the broker's edge against you. So this is why if you are planning on risking $25 and making 50, you are over leveraging yourself and you're exposing yourself to spend longer longer times exposed to the market, which will result in a loss in the long run. So 25 to 25, you'll spend less time and it will be easier for you to reach $25. Okay? So, Sarwar, I promise you, once the spreadsheet is done, you will get it for free as I'm seeing you daily watching my live and engaging with me. So, you will get that spreadsheet free of charge. Okay, that being said, thank you so much, my friends. I enjoy those testing strategy testing things. Um, if you are watching us on YouTube replay, please do not hesitate. Subscribe, give us a thumbs up. If you have any questions, use the comments box. If you want to join our trading team, all the links you need are in the description box. And see you tomorrow. Thank you and goodbye.